if you're at the right corners, the right traffic counts, the right demographics, it's, you got lines of people waiting to get in those type of centers.
All right, welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Capital. Today we're joined with Danny Newberry. Danny is the founder of Vail Commercial Group. Danny has acquired over 50 properties across multiple states, totaling over $150 million since 2008. Danny, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Absolutely. Well, Josh, thanks for having me on. I appreciate the invite and happy to be here. So, a little bit about my background. I was my dad's from Minnesota. My mom's from Colombia, and I was born in Mexico. So that was kind of an interesting one. But ended up in Southern California and then grew up in Southern Utah thereafter. So just been bouncing around ever since we got into real estate and prior to that. But essentially, what kind of got me on my journey was when I was in college. I took all the fun classes. They told me I had to start getting serious. And so I ended up taking a real estate course and bought my first vacant 6-unit apartment building in the first 60 days. Bought it with my best friend's hard money loan. He funded 100% of the transaction and at 8% interest, which in those days was, felt like a lot, but today it's nothing. And it appraised. I think I bought it for $155, put about $30,000 into it, and appraised for $330,000 within 6 months. And I was like, wow, why would I go back to school to get a degree I don't have to make less money than I just made on my first real estate transaction? So the rest is kind of history, man. I went full time, started buying apartments, got up to a couple hundred units, and then one of my investors actually was a big commercial owner, and so, I asked him one day why he invests with me but doesn't own any apartments and owns a bunch of real estate, and he said, "Well, I don't want to work that hard. I like long-term leases, no headaches, no hassle, passive income." I'm like, "Wait a second here, what are you talking about?" So I had to figure out what he was doing, and I ended up joining a commercial mastermind group, and through his help and this group I joined, bought my first shopping center, bought my first industrial building, office building, and to be honest, I kind of never looked back. I just stuck with true triple net leases for probably the last, I don't know, 8 years now, and so yeah, I've acquired about 50 commercial properties since then, all around the country. We're in a dozen states right now, and primarily focused on retail, neighborhood shopping centers, and small bay industrial. And like I said, we're kind of all over, but I'd say a majority of our portfolio, 80% of our concentration is Colorado, Arizona, Utah, Vegas, New Mexico, kind of a circle around Arizona. And then we do quite a bit in Texas as well. But yeah, that's a little bit about the history there and what I've done the last couple years.
Nice. So you started out with multifamily. You scaled to a couple hundred units, and then the next was shopping centers. What what enabled you to scale once you got into multifamily? Of course, you have to have cash down for the bank to feel like you've got skin in the game. So what was it? Reaching out to more friends and family members and more hard money loans, or was it other means?
Yeah, so I started off with duplexes and fourplexes, and I was borrowing hard money. And I got to about 50 units and about a dozen properties. And so ended up realizing, well, yeah, in order to scale, I need to figure this out. So I ended up buying a 48-unit apartment complex with seller financing and then raising the funds through friends and family. And then after that, immediately, we were able to buy a 138-unit apartment complex. And that one I did, it was just a normal transaction, nothing creative about it. And, and that's kind of, the evolution of scaling up. But, I definitely had to go raise money through friends and family. And ultimately, that's just what you have to do when you're buying larger properties and have to bring larger down payments to the table.
Yeah, yeah, and now you're in triple net, absolute triple net. They take care of, I'm sure, everything. Um, what was You've got to learn the game before you can play the game. So what was that? What was that experience like to where you could gain the knowledge? I know you went to a mastermind group, but what was the? How long did that take until you found your first shopping center?
Yeah, it really took me about a year and a half before I bought my first building. From the time I really like dove, 2 feet in and committed to finding something. And so it's like learning a different language. First I had to learn multifamily and residential, and yeah, getting into commercial, it's totally different terms, totally different scene and vibe and brokers. And so, it takes a while to get into, and you can make a lot of money in true commercial and triple net leases, but you can lose a lot of money. So you really want to make sure you know what you're doing. And so what we were doing is we were going after value add. We'd find something and call it with, 20 to 50% vacancy, sometimes 100% vacant. And we go in there, we do a full reno, on the exterior, roof, parking lot, monument signage, tenant signage, landscaping, you name it. We were going in and fixing it up and taking it from, call it a class C to, class B plus. And then we would go out to the marketplace and offer, lots and incentives such as, tenant improvement dollars to fix up their spaces, rent abatement, and and ultimately just really whatever it took to get them in the door. And so, we were able to do that on a few projects. Like I think my first one I bought, it was actually a medical office building, and bought it 50% vacant, had some seller financing. We paid 1.5, put 200,000 down. He carried the note, and I think we put about 200,000 into it and sold it on month 14 for 2.65. So, just by filling up a couple spaces, and that's the beauty of like these triple net leases. It's not like an apartment deal where, a lease adds a ton of value. Obviously, you can fix up a unit, get a couple $100 increase in rent, and then if you do that across the entire portfolio, you add a ton of, or across all the units, you add a ton of value. But with these, like you do one lease and it could be worth $500,000, $1 million. I just did a lease with Vasa that was worth about $5 million. So
Wow.
just one lease, long term, corporate guarantee, and the value of that lease is, it's pretty staggering.
Yeah, even negotiating the lease terms, including the CAM, insurance, taxes, it takes a different level of sophistication when you go over to retail commercial. Because reading in between the lines on the LOI and making sure everything's in there is extreme, because you are negotiating such a long lease, and it's
100%. Like that lease I was just telling you about probably took us close to, I don't know, 5 or 6 months to get from start to finish. I mean, just going back and forth with the attorneys was probably a dozen times, and in between each of those, I mean, you have to spend a lot of time. It's a lot of brain damage up front, but the beautiful thing is once you have it done, it's kind of done for a long time.
Yeah. Tell us about some of the biggest wins that you've had, and then some of the biggest learning lessons.
I mean, we just we do a lot of these value add things, so where we can add, a couple $1,000,000 in equity very quickly. So there's I guess I'll give you one I just did in Colorado where we bought it on auction. It was a flex industrial building in a good part of town, about 40,000 square feet. We paid we won the bid at 3.6 million. And what was going on there is that one of the anchor tenants was actually a national Eaton corporation. They their lease was coming up in about 8 months, and no one knew if they were going to stay or go. But we really liked the area. We felt comfortable with it, and we had heard a whisper that they were looking to stick around and that they were going to be submitting an LOI for renewal. So we felt comfortable with the deal. We won the deal. Renegotiated the lease in the first 3 or 4 months that we owned it, and that's all we did, and gave them about maybe 100,000 in tenant improvement dollars, and we kept it for a few more months. So at month like 10, we took it to market, and ended up selling just right after the 1 year mark. So we didn't have short-term capital gains for 7.3 million.
Wow.
So, very quick turnaround, couple $1 million in profit. I mean, I think it was like $3.5 million in profit, and didn't have to do much other than renegotiate a lease.
Well, and you're helping the community out too, because ultimately these shopping centers can become a store. And that was a flex warehouse space, correct?
Correct. Yeah.
But it can become a sore eye if you all don't come and purchase them and create value and keep the tenants around.
Exactly. Yeah. And so, at the end of the day, everything we buy, we try and clean it up, fix it up, fill it up. That was a much easier deal than our normal deal. That's why I call it a pretty big win, because there wasn't a lot of brain damage, a lot of capital improvements or TILC. And so that made it, just really easy. It was an easy deal, but they're not all like that. Most of the stuff we're buying is, has some improvements that need to be done, a lot of CapEx. A lot of re-tenanting, a lot of stabilization of the rent roll, and that can take time. So,
for sure. And then of course you've got the win thereafter. What I guess what is the difference with properties that you hold versus the ones that you sell? Is it just filling the cup back up with more cash to go redeploy, or is there a methodology behind it?
Yeah, so it's a little bit of both. Yeah, we have two buckets. One bucket is a fix it up, fill it up, and flip it, right? So we keep good cash reserves continually coming in, and then we have another bucket of where we like to create value, refinance all of our cash, if not a majority of our cash, out of the deal, put long-term fixed debt, and hold it for cash flow. So, those are some of the opportunities that we look at for, a 5, 10 plus year hold. And, we look at the quality of the asset, the quality of the tenant, and what we think the market's going to do long term. So, we're kind of have two different ways that we go about it. And, every deal's different. And, some deals we have amazing seller financing terms. And it's like, well, why would we want to sell that? We probably want to hold on to that. Other deals, it's like, well, our debt is coming due in a couple years. And, maybe it makes sense to test the market right now. Because we don't know where those rates are going to be, here in, call it 24 months, right? So those are the things that we look at, and every deal is a little bit different.
Yeah, where do you think the market's heading?
I mean, I've been hoping for a long time that we were going to, have another decent sized crash so we could go in and pick stuff up for pennies on the dollar. But, the problem is there's two ways to look at it, I think. And one is, there's a lot of cash out there sitting on the sidelines waiting for opportunities. And, so when those opportunities come, it's like, well, you got a lot of people chasing it. So how good are they really going to be? Number one. And then, at the other side of the spectrum is, you got $3.5 trillion in debt coming due. A lot of people bought, these, call it multifamily buildings or office buildings, and they bought them for a really low cap rate. And they were going to do, fix it up and refinance at 3 or 4% debt. Well, that's not the case anymore. So now all of a sudden you're underwater, and people aren't working from the office as much as they used to be. So no one's coming back in droves. And so I think there's some real issues out there. But again, there's a lot of cash just waiting to find those opportunities. So do I think there's going to be good deals? Yes. But it's not going to be plentiful like it was in 09, 10, 11, 12, right? It's not going to just be like every corner you look there's an opportunity. So it would be nice though if there was.
Yeah, well, and the inflation report just came out this morning too, so they're even talking about more rate hikes to calm down the inflation. So you definitely see some things starting to crack. There's a ton of volatility in the stock market, and then just how long can these operators hold on to these properties when they're just taking on so much water with rate increases? I guess we'll see, but there's definitely things on the horizon. When you all are purchasing a property, what is the buy box? What are you all looking for? Is it distressed? Is it in certain areas? Or
So I'm either looking for distressed where there's vacancy, there's below market rate rents, and maybe the property looks a little tired, where we can go in and we can refresh the property. We can, bring money to the tenants to basically improve their spaces and, essentially get rents to market to add some value. So looking for those type of deals, and then also looking for stabilized stuff that's really quality locations, but with really good seller financing, or maybe a second, something where we can get in a little bit lighter, or we can blend our cost of capital, where it just makes it more feasible to get into those deals today, just because, the rates are so high that, a lot of these deals don't make sense. It's hard to buy, a 6 cap deal when you're borrowing at 7%. So,
Yeah, negative leverage.
yeah, it doesn't pencil. So you need something to give, and so if the seller's willing to stay in and our cash flow is good and we like the project long term, then it doesn't necessarily have to be a huge distressed asset or a huge upside if we got the good terms from the seller.
You all are typically 60% LTV, or is it based on ARV when you are buying?
I mean, a lot of the stuff today that we're refinancing or we're financing is typically 50 to 65% loan to value, right? And so that's pretty typical in today's market. There are some projects that can get a little bit higher with some local lenders if you have good relationships, but I'd say plan on anything you're planning on holding, being in that lower leverage, which is good, right? So it keeps you out of harm's way typically.
Are you seeing it be tougher to find tenants with small businesses, or are you getting national tenants?
Retail is on fire. It's crazy. For a while there, especially even during the pandemic, people thought that retail was just going to get hammered. It did the exact opposite. There is so much demand. If you're at the right corners, the right traffic counts, the right demographics, it's you got lines of people waiting to get in those type of centers. And then and we do a lot of smaller stuff, right? We're not doing the big box stuff for the most part. We do some of it, but for the most part, we're looking for your 1,000 to 5,000 square foot bays where there's a lot more potential tenants that can take that spot. And 50% of this economy is small business, right? So that's who's occupying these spaces. Same thing with industrial. For the most part, we're going after small bay, which is 1,000 to 10,000 square foot bays, right? So there's a lot of demand for that. So we've just seen demand tick up, and also just rental rates, consistently pushing. It's very
Flex warehouse. That's a really good asset class. Just you've got e-commerce, and then you can tenant can release out multiple spots and say a dance studio or gymnastics for the kids.
Absolutely. Yep.
People coming out of their garage or out of their basement to level up and now get a business address for their online store. It's
yeah, absolutely.
Very, very cool, huge niche. Awesome. As far as their horizon, I know we touched on where the market currently is. How big are you wanting to take? You're at $150 million. So is it continue to grow, buy the right ones, and keep building out the portfolio and keep partnering up?
Absolutely. Yeah. We do a lot of joint ventures. We do a lot of strategic partnerships. I'm trying to dial it back instead of being all over and focusing more on the Southwest and Rocky Mountain region. So really focusing in on like Arizona, Colorado, New Mexico, Southern Utah, and Las Vegas is really a big emphasis for us and where we want to continue to build. So yeah, we're looking to continue to scale, continue to grow, buy more assets. So yeah, definitely exciting times ahead. And yeah, we're always open to different strategic partnerships.
Are you using third-party property management, or you all have vertically integrated in-house team?
Yep, vertically integrated in-house. So we pretty much manage everything, which is great.
Yeah, that's renovation crews, the collections, maintenance, anything. That's being the true operator is, in my opinion, the only way to go. Truly control the whole entire process.
100%. Yeah, I feel like third party, we always end up just getting kind of screwed just because, no one is going to operate your property the way you will, right? And they don't look at it that way. And, trying to reduce your expenses and keep tenants happy. I really feel like you got to keep it in-house.
Yeah, the expense part, instead of throwing money at the issue, get the issue fixed, get it at a much better rate.
Yep.
What are you looking for in partners?
Typically someone who can bring something to the deal, whether that is a deal, right? A good opportunity that maybe they can't take down themselves. Maybe it's capital. I mean, sometimes we do syndications. Not always. We do a lot of stuff in house, but sometimes, like when we do our larger deals, we'll do a syndication. Typically that's what we're looking for right now. We are looking to add people to our team. So, looking for guys that want to maybe be on a team that's out there doing this stuff every day. So we're opening up an office here in Scottsdale, Arizona, and looking for that as well. And people to collaborate with.
Yeah, that's huge. People are the pillars of the organization. Just having the right team, high performing team put together is that's a recipe for scaling and huge growth for sure. Very cool. If somebody wants to reach out, get a hold of you, learn more about you, possibly invest alongside of you, how can they reach out?
Yeah, so best way is to email me, and then I'll get back to you typically, within a day or two. But Danny, DANNY, at Vail, VAIL Commercial Group.com. That's probably the fastest way to get a hold of me.
Very cool. Danny, I truly appreciate your time today, and definitely look forward to following you, and we'll certainly talk soon. Appreciate it.
Thank you, Josh. Thanks for having me on. Really appreciate it.
Thanks. Bye.